consumers knew what they were paying and can check it when they go to the store. I think this idea of kind of the slow periods, you describe consumer and just, creating excitement during those quiet periods is going to be really one of the keys to success in retail in 2026. Yes, people are prioritizing events and holidays and things like that. It's getting, people in the shoulder periods into the stores is going to be key.
No, I couldn't agree with you more. And I think that what we're seeing is this kind of continuous, if you will, ups and downs, I think is, putting a lot of pressure on supply chain, demand forecasting, inventory allocation. And so it's been a bit of a challenge.
Yeah, I think this is a perfect segue just to kind of click into the agility aspect a little bit more, because I think this has been one of the big challenges this year already. Is we've already basically had 3 major storms in the Northeast. We've had all sorts of different things across other parts of the country, and I guess weather, crazy weather is becoming the new normal in a lot of ways too. And I think this just underscores that ability to kind of, being agile and making sure you can shift inventory in an appropriate way. Because we do see, like big spikes. Those big spikes, January 5th, the week of January 5th and January 19th were clearly the big storms in the Northeast that drove that. And then some of that, February is also some of that, pull forward in demand. And it's now going to be a question, what can you do in kind of the meantime? And can you pivot your business that quickly to make sure you meet consumers' needs where they are, especially in periods where it changes rapidly?
No, I think that makes. And do you think that the retailers learned anything from kind of the first storm, if you will, and how did they, kind of handle the second, the subsequent ones better?
Yeah, I think they did. The conversations we've had is that they learned in terms of what consumers, were looking for, what products, kind of level set on, what's working, with people kind of, sheltering in place or nesting or whatever you want to call it with the storms, what, it's been, that seems to shift in terms of what the product assortment people are looking for. So I think we've had some of that, and some of that might be the marketing messaging as well. I think where we're at now though too, because it's been kind of up and down, up and down. Now it really becomes more of an inventory management. Do we have enough supply for certain products, certain things, or do we need to start kind of working with our vendors to make sure we've got appropriate inventory for potentially more up and down? And I know it's supposed to be a little bit nicer this weekend across a lot of the country, but anybody who lives in the Midwest like me, that's probably just a head fake, and we're probably not quite out of it yet. So making sure that we're ready for that one last snowstorm or one last storm is going to be key, I think, in this environment.
That darn groundhog, right?
Yeah, Puxatawny Phil, I'm not sure exactly. Anyways, but just kind of, focusing back, we talked a little bit about this at the beginning, but, the idea of bifurcation of retail and, kind of the K-shaped economy or tale of two economies is certainly something that we continue to see with our data. What I'm showing on this chart is the year-over-year trend, year-over-year increase in visits by retail category. And I think what's interesting, if you look at the far right-hand side of this chart, you've got a channel like off-price, which just killed in 2025. And, based on the results we saw out of the, a few of the retailers this week, continuing to kill it into 2026. I think this plays in well with this idea of bifurcation, particularly among that middle income consumer who may not want to give up that lifestyle that they've become accustomed to the last couple of years, but can still get affordable, brand name prices at off price. Plus, there's been a few bankruptcies in the retail space that have given these retailers access to, an excess of inventory. So I think that's, one of those things we see. Dollar and discount stores had a nice bounce back year in 25 after an uneven 24. A lot of that, I think, goes back to the merchandising assortment and some of the pricing changes they made. But so we've kind of got that on the lower for the lower middle income consumers. But the next 3 categories, as we go right to left, you got beauty and self-care, home furnishing, luxury, things that tend to skew more towards that higher income consumer. And so we see evidence too that, this kind of wealth effect, high-end consumers, really anybody above 200,000 in household income, feeling pretty good. We see, stock market, at least until some of the volatility this week, had been holding up pretty well. Housing market holding up pretty well. And so this is a category, or some categories that generally we see strength. We do see evidence of maybe we've lost some of the aspirational customer, and I do think that had a part in the Saks bankruptcy. But I do think, generally speaking, that high-end consumer is feeling pretty good and continue to drive forward. And again, assuming we don't see too much volatility and kind of the asset markets going forward, generally speaking, should hold up okay. Now, on the far left-hand side, we've got things like mid-tier department stores, so your Kohl's, Macy's of the world, where there has been pressure. And again, that's where we've seen the most change, I think, in the last 6 to 7 months, is that middle income consumer. They have, and again, I'm going to define that as 75 to 125 in household income, 1,000 in household income. That's where a lot of the changes seem to be taking place. That consumer that maybe feeling a little bit more stretched from a household budget standpoint, doesn't want to give up things, but is finding ways to be more creative with their budgets. Again, that might be an off-price, visit. It might be something else. But that's where we've seen a lot of the changes, and I think that has impacted groups like Kohl's and others in there.
Yeah, but in some ways, like I've been thinking about this a lot because with basically the death of the department store sector, that like the off prices are, because right, they're multi-brand and multi-category. If you think about it, they're outside of like selling mattresses. They're almost like the new department store. And it was interesting. I was talking to a company the other day, right? We're seeing this huge, unbelievable kind of like strength and kind of like the DoorDashes and the Instacarts and the GoPuffs delivering like footwear, apparel, and accessories. And it goes back to, right, like you've kind of like lost that like neighborhood department store. And so I think TJ Maxx, if we look at their growth plans, right, they absolutely see that, white space. And so I think we're going to see, and like the malls are starting to bring in much more experiential. And so I think, outside of if you're a department store, obviously a traditional department store, it's kind of like a win-win for everybody. I do bemoan like I said, the death of the department store, but outside of that, I think we're ending up with like a much healthier environment.
Yeah, I think you just kind of pinpointed the ripple effect here too. So you're right. Malls, particularly A and above malls, have gone more experiential. That's pushed out more apparel and kind of more traditional retail. That group's has moved to maybe B malls and other. But I think off price has captured a lot of that too. At the same time, it's also put pressure on the outlet mall channel as well. Given that a lot of these are just more convenient to get to. So there is a big ripple effect. And again, it's kind of a couple years now that the off price channel has been hot. I don't see any signs of it slowing down this year too. It's been very interesting to watch and really been one of the big disruptors across the discretionary retail category. And you're right. I think it is interesting to look at the kind of the third party delivery services that started to partner with them. It's not just your restaurant delivery at this point. You are starting to see buy-in from some of these from consumers at some of these retailers.
Yeah, we've got quite a few questions. So before we move on,
Sure.
I'm gonna jump
Fire
in.
away.
So I'm going in reverse order, but so be it. How are advanced analytic tools helping understand shopper behavior and trends? Is AI disrupting this field?
I think it's a fair question. I think there's a lot of great data sources out there that can help retailers in real time figure out not only what's going on at the individual locations, but also kind of the pulse of the consumer. Things like we're showing on this. At this point, most major retailers have some sort of way to measure kind of overall consumer behavior and consumer visitation trends. Obviously, they have a pretty good feel for their stores, but I think it's just so fascinating the way that AI is maturing. And a lot of the platforms that are out there are starting to groups are starting to better integrate, actually work it into their day-to-day workflows. I think that's kind of the exciting part. Last year was, I would say, a lot of the AI type innovation was really on kind of the marketing content more than anything else. Now it feels like it's starting to actually be integrated into inventory planning, supply chain management, data and insights, really kind of every field. And Placer's part of it too, but there's a lot of other great data sources. There are a lot of great AI tools that are out there that we kind of see our data working in tandem with a lot of these platforms, and really interesting some of the developments. And to the point we talked about earlier about being more agile, I think there are some retailers, because of some of the systems they put in place to be a little bit more agile with AI related, have been able to stay on top of what has been a really pretty crazy start to 26 weather-wise.
Yep. No, I couldn't agree with you more. And then Tiffany asked, do you have this data regionally?
Yeah, we do, and we'll get into a little bit more on this later in the presentation. Thanks for asking that, Tiffany. We will get into that because obviously, as you might imagine, the trends in the Northeast are very different from what we're seeing on the West Coast in terms of year-over-year visits. But we have data, at the state level, we have data at the city level, down to the zip code level. So we've got a pretty good understanding, kind of broadly speaking, across retail categories, what's going on. And not a surprise, just to kind of foreshadow what we're going to talk about. But we have seen more weakness in the Northeast to start the year, some weakness in the Midwest as well, and better trends on the West Coast and the South. So that's just kind of the preview. But we do have regional data.
Another question from Michelle. Anything related to baby registry and toys?
Good question. We will get into a little bit more. Baby category itself has actually done okay. Maybe, and some of our thesis is, kind of we're getting that cycle, kind of the post COVID baby boom. So we are seeing some strength there when we look at the overall baby category. Just the different retailers and the brands that do sell baby products. Toys category, admittedly, that's a little bit trickier because it's such a fragmented category. We don't have a major kind of big box retailer like a Toys R Us at this point. We've got a few scattered around, but generally speaking, I think that's also one that we've generally seen positive. Toys generally had a pretty good holiday season, and I think that's partially where we are, just kind of that aging of that post-COVID baby boomer that baby phase.
Okay, like I said, there's a lot of them. Jason asked, what do you see happening with platforms like Poshmark? I recently bought several pairs of New Balance sneakers, new with tags for half the price. I wonder how platforms like this are taking market share. Good question.
Yeah, it's a good question too, and I do think that they are taking share. I mean, we do see. It's off price is what we focus on this chart, but certainly there's growth in thrift and growth in platforms like Poshmark. We do see a lot of that being disruptive, and I think that has also played a part in some of the issues that we've seen for the mid-tier department stores and others as well. So I do think that they continue to be disruptive, and this is one where we are seeing a lot of different consumer behavior, particularly among younger consumers on that too. I think that's where we've seen a lot of that strength. Maybe kind of this new celebrity kind of influencer shopper at thrift stores, and other channels like that. It's been really interesting to watch, and so I think that's another trend that's here to stay, at least in 2026. But it certainly has been disruptive. I think it's not the only source that's been pressuring some of these mid-tier department stores and others, but it certainly has been a factor.
Great. All right. There's many more questions, but let's move on and maybe we'll answer some of them in our conversation.
Yeah. So what's interesting? So what we've done on this slide is kind of let's take it down from the high level and let's go down another layer. And so what we've done is divided our kind of retail universe into discretionary and non-discretionary, and looked at the year-over-year trends. And it's probably not surprising that you see non-discretionary, so your staples categories outperforming the overall broader discretionary category. But what I think the takeaways here is that, and it kind of hinted at this earlier, is discretionary is actually holding up okay. So we do have evidence that this consumer right now is just not completely tapped out. It's more a situation they're being a little bit more creative, being a little bit more selective. But again, they've become accustomed to certain lifestyles. They want to keep up with their neighbors. They want to keep up with influencers, and so there still is quite a bit of discretionary demand. Now you do get certain periods of weakness here. September was a really weak for discretionary retail period. That was largely weather related. And if you can think back and remember when it was such a nice Indian summer, great September weather. Unfortunately, that didn't match the inventory of a lot of retailers, and so we saw a really soft September, but then saw that demand bounce back quite strong in October, November. As Deborah pointed out, some of that was early holiday shopping in October, and some of that in November. December is a little bit weaker, but again, there's some calendar shifts and other things that were taking place there. And again, we kind of saw the softness at least until right before the holiday period. But nice strong bounce back into January as well. So even though we are in an environment where consumers are being a lot more value conscious, looking for deals, they haven't given up on discretionary purchases.
I mean, it's fascinating if you look at like the macro data, right? Because consumer confidence is not strong. We do have inflation. I mean, call it low single digits. Traffic is still strong, but it's like when you kind of like take it all together, it's kind of where we are more or less makes sense. Although I guess I would even think that we'd see top line growth a little bit more sluggish than where we are. What do you think is kind of driving some of this? I mean, outside of like GLP-1s, which I think is a huge driver of kind of apparel, footwear, accessories spending. What do you think is happening inside the consumer psyche?
Yeah, it's a good question. I mean, I do think it is one that the consumers are being more selective with purchases. I think that's pretty clear when we look at our data. I think anybody probably on this call think about your purchase a bit more. Things have gotten more expensive. There is that element of sticker shock when you go into certain categories. And you're right, we are still dealing with a low single digit inflation environment, but still the compounded effect. I mean, there's still that element. Hey, I'm paying 40% more than I did just a couple of years ago. And I think that still weighs on consumers. And I think, when we go back to that kind of 2025 year in review slide that we started with, that middle point of the summer really was kind of June, July was really the time period. People like, wait a minute, this is a lot I'm paying for this. And I think, that's kind of the mindset is I'm paying a lot more for different categories and staples. I don't want to completely abandon, kind of the lifestyle I've had. And so I am willing to make some discretionary purchases, particularly ones that kind of, more forward, more kind of public facing discretionary purchase. But maybe I'm going to pull back on certain other ones. In terms of the revenue growth question, I do think there is some of it is pricing. I do think some of this is being augmented by online, and we'll have a little bit of, we can discuss that as well. I mean, I think online has outperformed in store. There's a lot of reasons for that. I think the maturity of Walmart and some of the other groups that have really invested in their online channel, there's probably admittedly some exposure to immigration. Those consumers that didn't want to be out in stores were probably buying online. So I think that there's a number of reasons for it, but I think when taken all together, I think between some pricing increases, some positive traffic, and then a mild shift towards online, that's kind of what's getting you the revenue numbers that we're seeing reported this week.
Yeah, I mean, I think that, we're kind of, call it halfway through retail earnings. And I would say that I think for the most part, things are slightly better than what everyone had expected. And so that I think is, kind of supercharging things right? Because everyone right now is either through or midway through ordering inventory for holiday. And I would say that we are seeing a more despite what you may think, a more optimistic perspective from retailers. And that I think is, certainly interesting. And, oftentimes, right, they're seeing kind of like data in different ways, obviously, than we are. And so I would say that they're probably seeing a healthier consumer than maybe the data might suggest.
Yeah, I think you're right. And what I've heard from a lot of retailers that I've spoken to the last, 2 months is really that late push into the year, that final push right into the holiday, rewrote the script a lot of ways for the expectations for 2026. And you pointed out a lot of returns, but that also created a lot of activity in January, and we've got that on the slide as well. That kind of rewrote the script. I mean, if we were gonna, if companies were gonna base their guidance on where we were mid-December, it was going to be a little bit softer, a little bit more cautious tone, but things improved and towards that late push in holiday and in January, and that's what's giving a lot of people confidence right now. Plus, we've got some other tailwinds. We've got, we lapped February, which was again, the crazy month last year, and so we've got some easier compares year over year, and then expectations of tax refunds and some other tailwinds. And so I think, based on all that, I think that there's this optimism about consumer, and more than maybe the data is showing, at least for the first half of the year. Now, there's obviously a lot of variables, geopolitical and other, that could change things in a hurry. But right now, I think that's kind of the mindset for a lot of retailers, is that we recognize the consumer is under pressure, but it's one that isn't completely out, and in a lot of ways is a lot stronger than what maybe we'd expected, kind of based on the second half of last year.
I think that makes sense. Another really interesting question along the lines of the Poshmark question. This is from Elizabeth. How do we think about the trend in thrifting and resale shopping, even among higher income consumers? There's badge value to getting a great deal from resale. Does this show up in data anywhere?
Yeah, we do. It's actually really interesting. We're looking at the thrift store data. We've done a couple analysis for the thrift store chains this year. So we see two kind of trends taking place. One is that we do see increase in middle income consumer. And when we look at customer segmentation, there is some truth to this kind of younger single, customer segment that seems to be a big increase there. So we have seen an increase in kind of that middle income consumer going there. But what's interesting is that we actually see a pretty big uptick in kind of the 250 plus in household income as well. So we do see this idea that it is not just kind of consumers looking to stretch their household budgets. It's a different group of customers coming into that. So thrifting has definitely become, I think, more than just kind of a stretching a household budget type phenomenon. I think there's other things going on too, and that there is this idea that unique merchandising, unique products, there's a story behind it. It's the success we've seen from a lot of retailers. It's not just low prices, but it's kind of the uniqueness. And Deborah, you kind of hinted this earlier. It's kind of what's going to drive people in the shoulder periods in between kind of the key holidays. Well, in a lot of cases, it's unique products and things that you can't get anywhere else, and that you can go tell your friends, either just casually or post it online. There's a lot of ideas of unique products kind of being that storytelling aspect that I think is so critical in today's retail environment.
Yeah, no, it's been fascinating to see the growth there, and then how different retailers are approaching that, and what some of these marketplaces look like, and what that opportunity is going forward as well.
Agreed. So I thought this was interesting too, looking at kind of dwell time. We don't always talk about dwell time on these, but I thought it was interesting to take a look at. So what you see is kind of, at least on the right-hand side for non-discretionary, we continue to see this downward trend, and that's been ongoing pretty much since, post-pandemic. We continue to see, to your point, people do more homework before they come to the stores. They plan out. Maybe this is something they bought online, but we're just picking up in store. So we've seen, generally speaking, a downward decline in overall, dwell time. And I'd say if you had to put a number on it, it's kind of mid-single digit declines over the last couple of years. So that's kind of what we're seeing. Now, discretionary is interesting because we had been seeing a downward decline, but we started to see a little bit of reversal last year on that, and more in the first half of the year than the second half of the year. Second half of the year, when I mentioned that when people started shopping around more, we did start to see that go down. But I thought it was interesting that we kind of did see, at least on discretionary side, a little bit more. And so some of the thought that we've had on that is, maybe more people as they go in are doing some more price comparisons in there. Maybe they're spending more time. Some of it's, I think, inventory related, finding the right inventory in a lot of the cases too. It's not a huge increase, but something that we did see in terms of the overall dwell time. It's interesting when we look at this too, because we talked about the idea that some of the stores are starting to see more DoorDash and other groups start to deliver, but I think some of that's being offset by other factors here.
Yeah, no, I think that the, how people are approaching, right, kind of like the physicality is, like you said, doing their homework, and this truly like kind of unified commerce shopping experience. So, right, they may go into the store, put items in their basket, go home, do a little bit more research, right? Maybe they do BOPIS or ultimately have it delivered. But it is interesting to see how the consumer is really kind of like touching all channels during their shopping journey.
That's, I think, the important point too, is it really is an omni-channel experience at this point.
Yeah, and so, theoretically over time we'll see that translate into better decisions and lower returns. But I think the consumer is still, right, like that is not necessarily a seamless experience just yet. But I think we're seeing it get better kind of day by day.
Yeah, no, I think you're right. I mean, we can go back to that one too, but looking at the broader trends, we did a big analysis for one of our partners looking at dwell time by retail category. And honestly, outside of the experiential, kind of restaurants and fine dining, which we've actually seen dwell time go up, and the idea that, people maybe not going out as much as they want, but when they do, they're going to maximize their time there. Kind of this entertainment, more experiences and things that we see at the mall. Those are one of the few categories that's up. The other one that's up is wireless providers, cell phone stores. We do see dwell time there, but generally speaking, the trend across the rest of the discretionary category continues to be down, and I think part of it is this seamless omni-channel experience that we're starting to see, or not just starting to see. It's been happening for a while.
I think we're starting to see it done better. I think that's really the story.
That, I think, is absolutely the key. I think that is really the story. Is that was one of those underlying trends in 25 that probably didn't get enough buzz, is that there was a lot of maturity in kind of the omni-channel space, and it's gotten a lot more seamless. I think that's exactly right. As promised, we were going to have some regional data, so I'm glad we finally got to it. If you've been with us on previous webinars, sometimes we don't get through all the slides, but I'm glad we were able to get to this one. And so again, no surprise on this one for anybody paying attention to the news. Anyone on weather.com or other channels, not a surprise here at all in terms of the year-over-year trends. You see big declines thus far, or at least through January 26 in the Northeast and the Upper Midwest. Better gains elsewhere in the country, and again, a little bit softer in terms of less snow, less rain in the kind of Rocky Mountain region as well. So that's one of those areas that has actually been not only strong because of weather, but that's, if we look at our migration trends, that's another area that continues to gain. So that's been interesting. So not a surprise here at all, weather related. I think this is pretty straightforward here. But I think it's interesting too, looking at which categories also saw big gains when we kind of saw the storm. So what we're showing is actual year-over-year change in visits. Some pretty big gains. That January 22nd, 23rd period in the Northeast in particular. What categories? Not a surprise. Home furnishing, grocery, dollar discount, superstores, pet being another one too. So again, this it's gonna be interesting when you get the first quarter numbers out of these companies too, because we're gonna see a lot of storm-related activity in the updates.
And one of the questions I knew the slide was around the corner, we got it from Mike, was how dramatic was the drop off in retail foot traffic during the frigid weather spell in the last 2 weeks of January?
Yeah, so we could go back to that one too, but what we did see is kind of that second week in January. Saw the big spike as we kind of got that first wave of weather. Went way down that second week. Then there was another week that we got a lot of prep. So that's, it was kind of a big gain kind of last week in January, kind of ahead of that. Then it got cold. And so we had about a week and a half of kind of soft traffic. And then February, which is partially because there was some more weather people prepare for, but also again, because we're lapping the year ago where things were so crazy, we did start to see things improve in February. And there's been a few retailers acknowledging that. I mean, I think Target, I don't want to say it was all just because it was easier comparisons, because I do think there's some of the things I talked about from an execution standpoint are also happening. But I do think that February, generally speaking, was, even with the weather disruptions, was a better month for a lot of retailers. So for those that's their first month of the year, it's nice to get off the year on a strong note when we kind of look at things, and then hopefully that momentum continues into March and April, so we kind of get to tax refunds and other potential tailwinds here.
Maybe just remind people, what does the calendar look like for 26?
In terms of retail calendar?
Mm-hmm.
Yeah, I mean, it's a good question. So I mean, like looking at comparisons, we've got, starting off February, we've got easier comparisons. March was generally, again, that kind of, people were a little bit uneasy because of tariffs, and so we've got that. We've got another, for those who watch the calendar closely, we've got another interesting Easter shift happening right there at the beginning of April. So that could shift things again this year, maybe move some things into March and away from April. So those kind of looking at kind of the monthly trends, we'll have that from a calendar shift standpoint. I don't think there's anything too crazy from the summer months from a calendar shift or anything like that. And then I have to go back and look at holiday. I don't know if we're dealing with this is the period where we get a little bit longer holiday season. I think we got one more year till we have that happen again.
It's interesting. I mean, it's I think right now with this kind of macro overlay, which I think there's a lot of concerns right now over higher gas prices, et cetera. The data for a while may be a bit challenging to kind of parse through. How are you thinking about some of the impact from some of the macro challenges that everyone's facing right now?
Yeah, it's a fair question, and again, some of the more macro-related stuff I feel like is over the last week and a half, and so it's still kind of in that adjustment period for a lot of consumers. When we see big shocks to the system, like we see with gas prices and others, it typically takes consumers about a week to 2 weeks to fully adjust to that. So I'd say we're still kind of in that adjustment phase. Usually takes a second visit for people to kind of. I went to the gas station. Nothing I could do about it. I had to pay that price, but now I'm being a little bit more selective about my trips and things like that. So it's too early to tell from a macro standpoint, but it's something that obviously we're closely watching at this point, and one of those variables that could change the outlook and kind of the dynamics for what we're thinking. But again, something we're keeping a close eye on, but it's hard to get a good read at this point.
Okay, thanks.
Yeah, of course. So moving kind of more from macro, we wanted to spend a little bit more time on some of the categories and some of the brands within these categories. Yeah, I thought this was interesting too, kind of looking at, the strength of kind of the value categories. And we talked about discretionary, non-discretionary, but, the idea of value and people deal seeking, and it really has been a pervasive trend. We've already talked about off-price quite a bit. Dollar discount we've touched on too, but, things like value grocery and the club channel itself too is one where we continue to see a lot of strength. And it's been interesting because we talk about things like, in past calls, we've talked about Walmart gaining among that 100,000 and above consumer, which is what our data suggests. Warehouse clubs has been interesting to watch where the gains from that has been, because we actually see a decrease in the household income from the trade areas coming into the warehouse clubs right now. And what we think is going on there is it's a lot of young families that maybe in an earlier point in their career, so less household income, but prioritizing the warehouse club membership. Anecdotally, we've heard stories about groups of families pulling together to get a membership here, but it does seem like a lot of the younger family formation is what's driving the growth in the discounts or in the warehouse club. There is a modest amount of new unit growth there, but a lot of that is just really comparable visits or same store visits that's driving that right now.
It is interesting to kind of see which of these sectors are working. Can you just for kind of the audience sake, can you remind us who shows up in kind of value grocery?
Yeah, it's a good question. That one is going to be your Aldi. It's going to be your Lidl. It's going to be Food Line. I think we include in there grocery outlet. We'd include in there as well. So those brands that kind of market themselves as kind of being, clearly, value focused and more dollar driven. Trader Joe's, I don't think we put in that category. That's one that we've had a lot of debate about which bucket to put them in. I think we put them in a different bucket, but that's one that certainly there is a value conscious consumer also going there, but it would be largely your kind of more private label focused chains than anything else.
I mean, it would be interesting to see because that's you've seen really I would say very sluggish growth in traditional grocery, right? I mean, there's a lot of dirt available to them that I think they're starting to look at. But if you think about store growth, right, that kind of value grocery segment has been growing. So I'm wondering if some of the you've got a lot, right, depending on how their kind of comp waterfall works. Just, are we kind of earlier in the life cycle of some of these stores? And then I don't know, for those of you who've been out to Vegas and if you're going to Shop Talk, give yourself some time to go visit. There's a new Aldi there, and they have alcohol in the store. It's like it definitely has a much more premium feel. And when you're in there, I mean, it's like you're like shoulder to shoulder with people, no matter what time of day you're in there. And so it's interesting to see this like evolution of their format as well as they continue to better understand the U.S. consumer.
Yeah, I think Aldi, if I'm being honest, has been one of the more innovative retailers out of the entire, not just grocery, but the broader retail landscape the last 2-3 years. Not only to your point, they are opening stores, but they're evolving the stores as they open. They're moving into more premium trade areas. They're going from what historically has been between like 55 and 65,000 in household income up to the 70, 80, even 90,000 in household income trade areas and doing well, capturing share as they move into those markets. We've got some pretty clear evidence that when they open up a store, there is an impact on traffic to other locations. I don't think people completely abandon kind of their local, their go-to traditional grocer, but certainly they are siphoning off visits there too. And so, it has been really interesting to watch. And I think that they are going to continue to be disruptive in the year ahead. We're starting to see more and more marketing from them. We're starting to see, success in markets where they hadn't had it. I think at this point, I've got that question from every grocer we work with. What is Aldi doing in my backyard? So I know it's a popular topic among a lot of the executives we work with.
And I think it's interesting in terms of
too.
Yeah, I think it's really interesting to see kind of where, right, because if you think about the difference between value grocery, and we'll put Trader Joe's in there for kicks and giggles, versus non-value, is the percentage of private label, right, which is over 90%. And so what does that mean for kind of the rest of retail as the consumers are increasingly comfortable with that? And then in like, right, we'll call it a GEO world, right, where brands can almost have like their own storefront. I mean, it starts to really change things really quickly.
It does. And I think that there are some key lessons from an Aldi and Trader Joe's. And I think it's interesting is, I mean, there clearly is more comfort around private label than really any point I can remember. A lot of these brands are becoming somewhat established brands on their own, but it's too simple to just call it private label, because I do think a lot of it comes down to the innovation on the private label. And maybe because there is this private label, and you can be a little bit more agile in terms of new flavor profiles, new products, new packaging, things like that. That does give some of these chains an edge when it comes to it. I mean, there's a whole cottage industry, as a lot of people on this call probably know, tied into Trader Joe's new product launches there and just new things that come out. It's almost this treasure hunt aspect that we've talked about a little bit in the past about off price has kind of migrated to the grocery category, and that's where a lot of the strength is coming from. And I put Aldi in that bucket too. They certainly stepped up their game in terms of product innovation at this point as well. So it's not just the idea that we're going to have private label products at low prices. There really has to be innovation behind that. There has to be excitement. This idea that you want a story to tell. If I got a unique product and something that you can't get anywhere else, a flavor that is really good that I can't get anywhere else, that's gonna keep people coming back. That's gonna drive visit frequency and repeat visits.
Well, and I think if you think about, right, where Trader Joe's in particular does a great job, right, is they'll showcase all of their new product.
They do.
And I think, I mean, as somebody who, I mean, I think all of us, right, like we're always interested in like, oh, what's new? That's a really brilliant, kind of from a marketing perspective, but also merchandising and driving kind of like, adoption. So I think that there's a lot that traditional grocers can learn from that channel, and of course vice versa. But when you see the growth and relevance in a very short period of time, I mean, it really does say something.
It does. I think that, again, you can't walk more than 5 feet into a Trader Joe's without seeing what's new on like end aisle or whatever. It really does help to create, almost elevate and a lot of, not just but it elevate the brand in a lot of ways. This, I mean, we've kind of covered mid-market and kind of the issues there too. Again, we see the strength in off-price, like Burlington and Ross, weakness at Kohl's, Walmart, strength there, but weakness at Target. So it's, again, this is one of those cases where, again, it comes down to the merchandising assortment and some of the execution, because I mean, I think what Target has been through, and obviously I mentioned that they had seen some recovery in February as well, but this is kind of just showing that it's not just all macro. There are some execution things and some company specific factors for different reasons as well.
So I just want to pause there. We have two questions. What categories are driving wholesale clubs?
That's a good question. I think certainly the fresh category and food overall has been a big part of it. I think that's where we're seeing a lot of, kind of growth there too. I do think actually some of the apparel has been on that front too. Between those two, those are the categories. Now, again, our data doesn't show, where people are going within the warehouse clubs, but based on, conversations with those clubs and, what they've publicly reported, as well as kind of cross visitation data. That's kind of the categories that we've seen, I think, the biggest strength from.
And then that was a question from Ryan, and then Claire followed up. Wouldn't the shopper profile of wholesale clubs be different than those of the other types of retail on that slide?
Yeah, there would be. Yeah, so we have seen a different profile. Historically speaking, you mean, the average wholesale club shopper, late 30s, slightly more affluent than the rest of the U.S. population, but it has been shifting. We've seen that trade area where people are coming from. It's coming from younger trade areas, coming from lower household income trade areas, and then when we overlay customer segmentation, there has been a definitive shift towards younger families, even younger singles. That type, those zip codes, those trade areas that have a higher percentage of those type of population in them.
So it's interesting, and I know this seems like a far throw from our conversation, but cat ownership is up like, and we just happen to get a kitten too. So, it's all, we're just in the cool kids. But cat ownership is up 29% year on year. And when you dive into that data, because of course I was curious, and the reason, the majority of the reason is that we're seeing more multi-generational households. And so Gen Z wants a pet, right? A dog is a lot of work, et cetera, right? They're living at home. And so they're getting cats, right? Cats are very low maintenance. They don't take up a lot of space, et cetera, et cetera, et cetera. And so when you start to think about more of this like multi-generational dwelling for many reasons, right? Like lack of housing stock, cost, et cetera, availability, then you're not only sharing, right, those warehouse club memberships within a household, but you're starting to see, when you start to think about zip codes, et cetera, I think the data can be more difficult to parse as well.
Yeah, there's a lot to unpack with that too, because once you told me about the cat ownership statistic, I floated that idea to a couple of other retail executives, and they had not heard that, but they started to get, the wheels started to turn there. They're like, yeah, I think that there's absolutely something to that, and I think this is indicative of some of the bigger picture trends. I think you're right, multi-generational household formation, particularly in southern markets, that's where we see it happening a lot. And the amount of times I've been asked about why my stores are not doing what they're supposed to be doing in Dallas and Austin and Houston and Tampa, Atlanta, Orlando. It has been pretty frequent question, and I think a lot of that's happening more so in the Texas market than some of the Florida markets. Florida is a different situation where you do have a lot of high household population from the Northeast moving there, in the Carolinas as well, but certainly in the Texas market, we do see a lot of changes, a lot of shifting of, where people live and what's going on. And I think that's had a major impact on the overall retail markets in those places. And I do think overall, it has been interesting kind of between, the different groups owning pet, because pet has been one of those categories that, I think they benefited a little bit from the holiday as well, but it really is, there has been an ownership trend. It's kind of a pet ownership 2.0 after the pandemic. We saw a big push early on, and now we're kind of seeing a secondary push. And to your point, I hadn't thought about it, but the cat ownership, but I floated that idea, and there seems to be some support around this thesis. So.
Well, we can probably both do the work together, but it'd be interesting to see regionally what that looks like. That would be fascinating. So there's a question related to pets. Why are pet visits down? It's actually a great question. Why are pet visits, this is from Barrett, why are pet visits down during the summer but up in Q4?
Well, I mean, September was a mismatched time period. Again, there was a lot of seasonal merchandise. Like that's when you have your fall merchandise, but basically we had an extended summer. So I think that's a big part of what was going on there. July, I'd have to go back and look explicitly, but I think, and I think you and I talked about this last time too. July was a weird month because of the timing of the holiday. It ended almost having like 2 weeks off basically, where people like basically did a long vacation to begin July. And I think that had an impact. But I think as we kind of moved into the fall, I think what we saw there was, largely this kind of focus on, more gifting, and, pet became a great category as there's been more household formation and, groups with pets that cat ownership statistic. Yeah, I think that drove a lot of that holiday sale and kind of the strength of pet in the back or the fourth quarter of last year.
I love this question from Mike. It's so kind of a lot of perspective here. Aldi doesn't put their name on private label where Lidl does. Do you think that's a factor in Aldi's significantly faster growth than Lidl?
I think it could be. I think that could play into it too. It's one I haven't done any kind of analysis behind it, but I think it could actually be part of it. And this idea, I think this trend where people are being more thrifty and kind of being more mindful of their budget, but they don't want to be reminded that they are. They kind of want to be blissfully unaware that they're trading down. I think that's a bigger trend that people are kind of talking about or admitting at this point. And so if you go in there and you don't have that brand that makes you feel like, oh, I'm buying something from Aldi, even though you're in the store, I mean, there is a psychological element to it too. I think that what you can do if you're kind of a retailer that caters to kind of lower middle income consumer, don't make those consumers feel like they're trading down. You have to create excitement, create a story, think that they're getting a deal, that they're getting more for their buck than they maybe are. I think that's kind of one of the keys to success right now.
Also, going back to Mike's point, right? Since Aldi has greater volume, like I find their fresh is honestly second to none because it's turning so rapidly, right? And they're sourcing locally. So it's interesting kind of like what begets what, if you will. And so I think that, I mean, and Aldi may be the only grocery store I've ever shopped in where, right, like you get there at the end of the day, they may be out of a certain kind of like fruit or vegetable, right? Because they've just sold through it. And so I think that that's a very interesting, right? This idea of like fresh first and what that means and how they set up their stores, right? They're like leading with fresh. I find that there is more there than meets the eye. And so it's not only, I think they're kind of continuous kind of rethinking of like store locations, store size, leading with fresh, and then, not having their brand per se on private label, right? Like I think there's so much that there from like their model, but right, like you're also limited assortment, right? So there's also that perspective. And then just kind of like how they motivate and compensate employees. I think it's one of those, no matter how many times I study it, I find like I continue to learn more. So I mean, I've been we won't say number of years, let's just say it's well over a decade. But and then like when you go to Europe, right, and you're like taking that to a different level, right? It's
Very much
just
so.
it's really kind of one of those things, like to wrap your mind around it is truly impressive. And then it also shows you, going back to, right, with traditional grocery, the opportunity they probably have in own brand, private label, whatever you want to call it. And then you think about the margin opportunity ahead. Like I just think there's like so much to unpack there, but I know that we are rapidly running out of time per usual. So.
No, I know, and I figured, like always, we're gonna miss on some slides. So for those of you who are interested, you can get copies of the slide after the presentation. There's some additional data on both restaurant category visits, dining, Starbucks, which is going through a resurgence. We won't cover that today, but there's certainly some additional data and slides on that. Also some data on the malls themselves. The key takeaway, again, we continue to see that consumers interacting with malls very differently than they have in the past, more experience focused, and that's changing away. A lot of retailers plan around mall visits and things like that. So you can find that in the additional slides that we're not going to cover today. And if you do have questions, we can go from there. But Deborah, I did want to spend time on kind of the athleisure and kind of the brands there, because I know that was something you and I talked about ahead of time, and just kind of where we stand with that category. I'd say it's a mix of results there. I mean, we've got we included Nike and Lulu on this, and Lulu's had kind of an up and down period. Nike's had the same kind of trends there too. Kind of where we stand, and I think it's still very much a mixed bag in that too. We do see some of the kind of say maybe a shift away from a few of these brands to some of the kind of more earlier stage, like a Viore and Aloe in there as well. But it's been interesting to kind of watch kind of the trend in the athleisure space, and I know you and I have talked about this in the past, but it has been one of those categories is kind of, we're finding winding down in demand. Are we going to find, or is it just generally a shift to other brands within this category, people looking for newness? I'd love to get your take on it before we wrap up here.
Yeah, I mean, and the reason I think this is so interesting is that with GLP-1s, right? So, well, we'll just say 21% of Americans have been on GLP-1. Of those, 72% have changed a size or more. And then of the 21%, 54% are planning to purchase apparel or footwear. So you start to think about this, and I think it's actually one of the reasons apparel and footwear held up so well over the holiday season, right? Because if your clothes don't fit, right, that's obviously a challenge. And I have this great photo. There's a guy on stage. No head shared. And he's got like this belt, like his pants are barely like staying up, and he's got like even the belt's too big. And I'm like, oh my gosh, this is not going to go well. But I think that goes back to, right, like there is a point where you do need to purchase also if you feel better, et cetera, right, all that great stuff. But I think that this category is very well poised for growth. You have seen kind of company specific missteps along the way, which I think has been challenging. And then, right, Lulu's been hit with de minimis. So I think like their whole model, right, they had a model, it was working very well, and that whole model has shifted. And so the challenge, and if you kind of look at some of the volatility, but I think there are a lot of these kind of like up and comer brands. And I personally believe that product that is more technical going forward is going to be stronger, because I think people are doing more research. I mean, I tend to buy fairly technical product, and I wouldn't necessarily say that these two brands are the top of my technical purchasing list.
No, that's fair.
And so it would be, it's interesting. And I think it goes back to, right, consumers are doing more research before purchases. That should eventually lead to lower returns. But I think that because of that, we're seeing different brands and different products that are, kind of gaining in terms of not only market awareness, but also attribution. And so I think there is actually a real change here. But if you think about it, for those brands and retailers on the phone, like health, wellness, right, kind of anything related to like athleisure, right, that's where we're seeing kind of like real sustained growth. But you can put technical into most garments, and that I think is where it starts. To me, like, this is like, not to kind of totally geek out at the end here, but like that's what I find very interesting is that you can make a pair of tights technical or a blouse, right? Like, it's just about the fabrication.
Yeah.
And so I feel like we're at a very interesting point where maybe some of these brands that had seen a lot of strength at one point in their, we can call them Cinderella brands or whatever, but that I think there's this opportunity, and I feel like 26, and I know, kind of RJ, you feel like, I think we're just going to see some very interesting companies that succeed, and not necessarily what we expect right now, because I think the consumer is changing faster than we've ever seen them before. I mean, their sizes are changing, their preferences, their ability, whether it's through, GEO or just, the ChatGPT, the apps in the store, right? Like, Target's the only company that has an app right now, but we're going to see like many more of those. So I think the way the consumer shops is going to change exponentially.
It's already changing, and I mean, even that's a short period of time, and I know we didn't have enough time to cover that today, but that has been, one of those trends that, if we exclude weather, that has been a major trend, is that AI and other platforms continue to shape how consumers shop, and I think that's only going to continue at a really fast rate that, maybe a lot of brands are not anticipating. I will just add one more thing on that, Felicia, because I think you nailed it perfectly. I think 2025 was kind of the, again, we did see evidence that, people were losing weight and, taking better care of their bodies. That did lead to size changes. And I think, we started to see a bit of shift away from comfort to technical and performance. Our evidence shows that fitness clubs and gym memberships had a great year in 25, and that shouldn't happen in a year of macro uncertainty. Typically speaking, that's a thing that, historically speaking, people have gotten rid of pretty quickly. It's changing, and I think we're moving kind of, past the comfort aspect of athleisure into the performance aspect. So to your point, I think, anything you can do to infuse technical or performance into kind of your existing assortment, I think is a positive there. So that, I think we're probably about done here.
Yeah, I feel like we just like didn't even get started. I mean, like,
there's so much stuff. A lot of stuff on the cutting room floor with you and I. We always leave some stuff there. It's always part of the fun. Check out the slides. There's a lot of surprises in there, a lot of fun stuff that you can't see on the webinar. So we'll just make that exclusive content here as a part of the deal. But always a pleasure talking to Deborah. I love where our conversations go here.
Me too. And I do apologize to anybody whose questions we didn't get to. So RJ and I are always available, and we like to geek out on this stuff as much as the next person. So please reach out to either one of us, and we'll be happy to follow up. RJ, thanks. Enjoy the rest of your day, the rest of your week. Always a pleasure.
Yep. Stay warm, everybody. Talk to you soon.
Definitely. And dry. Bye.
Yep.